All right, let's do it. Let's do it. Let's do it. Good morning, everybody. Hello, how we doing? Welcome to the first pre-market prep of this short holiday week. I'm your host, Adam Holland, stock options expert market strategist. Yesterday, the computer setup was giving me some trouble, so today we're just rolling a la carte, right? As we are. I apologize for the audio quality, but I didn't want the mic to give me any issues getting rolling here. But speaking of getting rolling. We're here every day, right, to go over the important news, notes, and information, trade ideas necessary to remain consistently profitable here in these crazy markets. And we're here to get 1% better. So that's exactly what we're doing here this morning. Good morning, Sharon. Good morning, everybody watching this via recording and joining us for the future. Let's go over what we have going on today. As I've talked about previously this week, typically on short weeks, you end up getting not as much volume, not as much conviction. So that's really the important thing to keep in mind as you go on throughout the week, right? Is just to make sure that you understand what the expectations are for the week, right? Understanding kind of how you need to come out and attack things or maybe lack thereof, right? Which is really important. People coming out and treating every week like the same week is really a huge issue because every week is not the same week, right? We have different information happening, different data that's being dropped, different circumstances. So making sure that you're here and you understand what the circumstances are going into each and every week is super, super important, right? You've got to know your battle plans and everything like that when you go into the week. So that is what this session is, right? Making sure that every day before you go into markets, you understand the lay of the land, right? The exposition, the backstory of what it is that you're stepping into, and then that way, you don't approach something that should be like a docile, low volume, low conviction week like this week with the same tenacity you would a high conviction week, right? When we have a full week where we don't have big money that's out on vacation and hanging out on their yachts, right? When you have a full week, you have big money moving the market, you can actually put forth effort, right? Put forth real capital behind moves. But when you have weeks like this week, right, where a lot of people are off, right? You don't expect big moves with big conviction, and that allows you to say, okay, I'm going to size down. I'm not going to risk as much. I might not place as many trades. See profit, take profit, that type of thing, and that's really what helps you continue to grow the account. Because again, it's not like big weeks that take away from you. It's weeks where not much happens and you try to make a lot happen. Those are the weeks that really set you up for failure. So in terms of what we have on the calendar, let's see here. Today we get final U.S. services PMI at 9:45 a.m. So that is probably the only thing that could really affect what we have going on here. So at 9:45 we get some data coming out. ISM services at 10. So the market might pause and wait for that. Might cause like a 1 minute pop, something like that. In terms of Thursday, we get jobless claims at 8:30 a.m. That's really the biggest thing. We have some different Fed presidents speaking: Philly, Chicago, New York, Atlanta, and Dallas. Speaking just all throughout the day and the night. But initial jobless claims is the biggest thing at 8:30 a.m. And then Friday, wholesale inventories at 10 a.m. And that's kind of the only major important thing. So not a whole lot of data left this week. As I said before, pretty short week, so not too much to have to worry about, which is nice. Balancing act is our top news. So how will higher oil prices factor into the economy, and can they be sustained? Those are some of the questions traders are now asking as they look to position their portfolios for the rest of 2023 and beyond. Remaining below $80 per barrel for most of the year, WTI crude futures broke above that price level in the summer and jumped to as high as $88 per barrel on Tuesday. Brent traded above $90 after Saudi Arabia and Russia said they would extend their voluntary production cuts through the end of the year. So I think that's what a lot of people have to realize too, is that like this is something that was announced, right? We actually covered it here on the pre-market prep session where they announced the cuts to production. This isn't like because there is, some natural disaster or something going on that's causing it. It's man-made, right? It's a conglomerate, monopoly that came together and said, hey, we want to make more money, so we're going to cut production, right, in order to drive prices higher. And that's what they did. Now, in terms of inflation risk, many had thought the OPEC Plus leaders would lengthen their cuts into October, but the 3-month extension came as a surprise. Equities also saw some knee-jerk losses, with the likelihood of higher prices leading to more monetary tightening. The latest cuts by the Saudis, 1 million barrels per day, by the way, and Russians, 300,000 barrels per day, are on top of the April cut agreed by the OPEC Plus producers, which is around 1.66 million barrels per day, which extends to the end of 2024, while both countries stated they could even consider deepening their cuts further depending on market conditions. So this might not be over, right? They might continue putting pressure on oil prices. So, following the announcement, U.S. National Security Advisor Jake Sullivan said that President Biden is, quote, doing everything with his toolkit to be able to get lower prices for consumers at the gas pump. Quote, or excuse me, the national average price of a gallon of regular gasoline now stands at $3.81 a gallon, according to data from AAA, marking the highest seasonal level since 2012. Higher energy costs could also dent hopes and forecasts for a, quote, soft landing, which has gained renewed momentum following a recent spate of economic data. Now, in terms of what to watch, expensive energy could curtail growth across the globe, especially in China, whose economy is under pressure due to the nation's stop-and-go pandemic rebound, property troubles, and debt problems. The Saudis and Russians need to be careful about this and pull off somewhat of a balancing act, because if things get worse for China as oil prices stay high, their recent cuts may end up backfiring and reduce demand for the commodity. Interestingly, the G7, along with the EU and Australia, also appear to have deferred regular reviews on their $60 Russian oil price cap scheme, despite, let's see here, I guess that's Urals grade crude trading at $74 per barrel on average in August. So it's one of those things where, this could start to drive inflation back up around the globe. A lot of economies are still under pressure, and notably Russia is still involved in this war that they're kind of struggling with. So they're trying to help pad their bottom line as well, since they're in this ongoing conflict. So I mean, gas prices right back up again. Is this something that you necessarily fear? We can't do anything about it, so it's kind of just one of those things where you end up using the tools that you have available in order to make up for that, right? In order to kind of what's the word that I'm looking for? I don't know. In order to like take the place of that, or in order to account for that, you use tools like the market in order to take what money you have and leverage that into more money. That's what you really want to focus on. Unfortunately, when we aren't OPEC, we can't do anything about gas prices, but we can use what money we have and leverage it into more money so that the dent doesn't hurt as much, right? And that's really what you want to focus on. But as of right now, it doesn't look like prices are headed lower. I know the U.S. cut into the Strategic Petroleum Reserve, earlier on this year in order to take pressure off gas prices. I don't know if we have enough of a reserve to do that again. The U.S. is actually the world's largest oil producer, but we use more oil than we produce, right? We produce like a quarter of the world's oil, but we use more than that. So it's a struggle, and that's why people like Saudi Arabia and Russia have so much power. Now, in terms of economic data here, data dependent, Federal Reserve Governor Christopher Waller said last week strong economic data will buy the central bank some time as it mulls whether further interest rate hikes are needed. That was a hell of a good week of data we got last week, and it's going to allow us to proceed carefully, he said, referring to the non-farm payrolls report, PC inflation data, and the JOLTS report. While the progress so far has been encouraging, Waller said the Fed can afford to keep rates higher for longer, and it is key to, quote, see whether this low inflation is a trend or if just an outlier. Markets are widely expecting the Fed to maintain rates this month, although there is uncertainty over its rate path in the meetings thereafter. Now, in terms of IPOs and IPO news, arm and a leg, British chip design firm ARM Holdings, ticker ARM, has updated its IPO filing, saying it expects to price 95.5 million shares between $47 and $51 a piece. That would value the company at as much as $54 billion, which is lower than the $64 billion valuation at which SoftBank had previously bought a 25% stake. It didn't already own it, bought a 25% stake it didn't already own in ARM. The chip designer also confirmed that several major tech companies, including Apple, Google, and NVIDIA will become investors in the offering. While the hype surrounding ARM has been growing, Wall Street analysts have warned that this may not be warranted. Investing group leader Jonathan Weber also raised concerns over ARM's high valuation, even if its underlying business growth is attractive. So this is something where, we've been watching kind of the ARM IPO filing develop. They've been talking about it for the last few weeks. SoftBank has poured money into a lot of different companies, ARM being one of them. NVIDIA tried to, purchase ARM, and it was blocked, by regulatory bodies. I still maintain the same feeling and sentiment that I do around every IPO, which is you'll get it at a better price. So even if you do like ARM, wait for it to IPO, wait for, the hype to come and go, and end up getting it at a better price because it will inevitably come. In terms of energy news here, energy mix, Enbridge, ticker ENB, fell 7% in extended trading on Tuesday after announcing 3 deals with Dominion Energy, ticker D. It will buy East Ohio Gas Co., Q-Star Gas, and Public Service Company of North Carolina for a combined value of $14 billion, creating the biggest natural gas utility in North America. Enbridge also announced a around $4 billion equity issuance, a portion of which will be used for acquiring the utilities. The deal comes 10 months after Dominion said it would review its business to improve results. Moody's revised its outlook on Enbridge to negative from stable, saying the deals would add pressure to the company's already weak financial profile. So just energy news, 3 deals, they got buying going on. Typically, whenever you have a company that gets acquired, the company that's getting acquired, their stock goes up. The one that does the acquiring, their stock goes down, because just like at an auction, if you actually win an auction for something, right, you get the winning bid. It means that you typically had to outbid others and you had to overpay. So that's kind of the thought process behind that. Now, in terms of today's markets in Asia, we're green. Everywhere else, we're red. So in Asia, Japan, we're up 0.6. Hong Kong flat, China up 0.1, so barely. India up 0.2. The footy in London down 0.6, Paris down 0.7, Frankfurt down 0.4, the Dow down 0.2, S&P down 0.2, NASDAQ down 0.3, crude down 0.3, gold flat, Bitcoin down 0.1% to 25,718 bucks. Today's economic calendar, like I said, not too much going on. PMI composite final, we have that at 9:45, and then ISM service index, we have that at 10 a.m. So 2 pieces of news here during the market day. They're not as huge as like Fed news, but they are still impactful. In terms of what else is happening, and finishing up with our rapid fire bullet point rundown, in terms of strikes, Warner Bros. Discovery lowers adjusted EBITDA outlook because of that whole strike that's going on right now with AI. Zoom calls on FTC to look into Microsoft's Teams bundling. Meta to end news tab on Facebook in UK, France, and Germany. I know that Meta said that, Europe is really tough on big tech, and, they're looking to crack down. And Meta said, hey, if you do want to crack down, then we're just going to go ahead and get rid of the news, on all social media tabs in your countries. And Meta followed through with that. So we'll see how that ends up playing out, whether it hurts Meta more or people complain more. Kroger is in talks to sell grocery stores to CNS amid antitrust concerns. FTC expected to file antitrust lawsuit against Amazon this month, ticker AMZN. United Airlines, ticker UAL, drops after departure pause, ground stop since lifted. UBS looks to renegotiate securitized products deal with Apollo. And then ASML says first pilot EUV chip making tool to launch this year. Illumina, ticker ILMN, ropes in Agilent, ticker A, executive Thason as new CEO. And then GameStop, ticker GME, earnings preview, what could be the latest cost cuts. So that's pretty much it. That'll wrap us up, put a bow on it, and take us out for today's session for 9/6/2023 as we roll hot into September. August and September can both be tricky months, right? As I've talked about previously, September is a month where the market typically ends up red on average. So make sure that you're just aware that we can get that tricky movement, especially this week when we have shortened week, right? A lot of people that are off still on holiday, things like that. But making sure that you're still doing what's necessary to maintain your positions, right? Maintain your profitability, and most importantly, not blow that account sky high, which is absolutely paramount. But that'll take us out for today, everybody. You got 1% better. Congratulations on that. Now make sure you're putting that best foot forward and using that knowledge to execute as we move forward in markets. Have a great rest of the day. I'll see you back here tomorrow morning for our next Premarket Prep session. Have a good one.